Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 26th of April. It's been a fairly mixed week in the market so far. A good start to the week, particularly in the US, with some very strong economic data, particularly with regards to housing and retail sales. Somewhat overtaken later in the week, with reports coming out that the White House was considering a big hike in capital gains tax, which could also be alongside a hike in corporation tax, somewhat shaved sentiment towards the end of the week, as indeed did the worsening spikes of COVID-19 in both Japan, Brazil, and in particular in India, also denting sentiment, and not surprisingly perhaps some of the tourism stocks were also taken down. That being said, markets are fairly comfortably ahead in the year to date. The Dow Jones is up 10.5%, the S&P 500 up 10%, the Nasdaq up 7%, and indeed the FTSE 100 also up 7%. Turning to next week and companies reporting, well, hold on to your hats because it's a bumper reporting week on both sides of the pond. In the UK, all of the banks will be reporting: Lloyds, Barclays, HSBC, NatWest and Standard Chartered. A couple of things to look out for will be whether any of the bad debt provisions will be released, as we saw in the US banking updates a few weeks ago, and also any updates that the banks might be giving on their dividend policies. We're also going to hear from both of the oil majors within the FTSE 100, namely BP and Shell. We should get some feel for whether the surge in the oil price so far in 2021 is feeding through. The oil price is up somewhere around 26% in the year to date, and again, always at the centre of any update from the oil majors, their current thinking on their own dividends. On top of that, we're going to hear from the pharmaceutical giants AstraZeneca and GlaxoSmithKline. We've got full year numbers from Sainsbury and indeed updates from the likes of Persimmon and Unilever. The pace is a little less frantic in the States. Of particular interest will be the technology sector. Obviously, investors are currently debating as to whether the technology use which has been brought forward in the pandemic will actually still be the case in a post-pandemic world. There's also some concerns about regulation in the background, and of course with higher valuations come higher expectations. So the likes of Amazon, Tesla, Apple, Facebook and Google owner Alphabet all have some work to do to keep investors happy. Also in the States, an additional swathe of companies reporting, ranging from anything from Ford Motor Company to McDonald's to Starbucks. Thank you for watching. Have a great week.